Hey, substitute today for Annabelle Pacheco. I'm Bill Gross, and this is Annabelle Pacheco's Wednesday afternoon multifamily, out-of-state focus, multifamily investing, real estate Zoom call, where we get together every week and talk about investing in multifamily properties, primarily out of state. And if you've been on the show before, you know she talks about the property that she's flipped in Texas and some of her other investments. And along the way, she's also met some fantastic other professionals that we have used to educate and to network with, and hopefully to help us all be more successful in business. And so I'm really excited today. I don't think I have Jen, if you can make me the host, I can then change the views a little bit on that.
Do we have the ability to do that?
No, Jen, if you could, Jess, I'm sorry, if you can.
Oh, Jess, okay, because I was like,
Jess.
Okay,
I'm calling out to Jess, but I'm looking at the name Jen on the name.
Okay.
So hold on one second.
There you go, Bill. You should be co-host.
Thank you. Okay, so I can spotlight. There we go. So there we go. So I'm glad to have in today as special guests. I've seen them on other multifamily Zoom calls as guests and as attendees. But excited to have the Remote Multifamily Investing Academy. That's their new branding. So we get that right. Remote Multifamily Investing Academy. Jen and Stacy Conkey. Hey guys, how you doing?
Great. Thanks for having us.
It's good to be here.
So just a quick background. Where'd you guys grow up? And then how did you get into real estate investing?
I thought for sure he was going to say, and how'd you become a Yankee fan?
No, I don't really want to know about that at all.
Yeah, no problem. Born and raised in California, honestly. And at the time that I got involved in real estate was in 2003. And I did that DIY approach, trying to do it with my dad and my brother, basically banging my head on the wall for 7 months, and started with flipping and wholesaling in Bakersfield.
Wow.
Yeah, I know,
Garden
right?
capital of California.
I mean, it was epic. Back then it was, you're just working in all these foreclosures and getting them out there, working the HUD list, and opportunity for a lot of money if you're doing it right. And I started doing it right once I met Stacy.
Okay, we'll keep the double entendres out of that one. So started in real estate in Bakersfield, flipping houses, or in multifamily, or both?
No, flipping houses first. I was flipping and wholesaling single family first. I did that for a very long time on the side while working in corporate America for about 22 years.
Oh, wow.
And just basically flipping for profits to have them and eventually get into buy and hold. But it took a few years of doing that. Because like I said, I was doing it in California, which is not a very lucrative market when you're trying to do that. There's not a lot of margin. You got to put a lot of capital up in order to make a lot of money. So I ended up going into multifamily, buying my first duplex and out of state, in an out of state market, which is a lot more lucrative because your capital goes further in those markets.
Right. Well, generally can, if you know what you're doing. It sounds like it's a great opportunity. So today, what does your business look like? You're the multifamily, sounds pretty obvious, out of state. You guys are in California now still?
No, we actually live in Florida now. And we live in
part?
the Orlando area. Just moved here less than a year ago.
Nice.
But we had been living in California up until last summer. Just
I'll be in
moved
Orlando
here
next month. I'm with the XP. We have a national convention there in June.
Oh,
and then
awesome.
I used to live in Boca, and I invest in South Florida as well. So I'm looking at property in multifamily in Orlando. So I love Florida. Awesome. Right. So you're in Florida. So then remote multifamily investing, are you investing in Florida remote areas? Are you investing in Florida and bring investors who are remote to you, or how does that work?
Oh, no, we're not investing in Florida at this time. We did, however, just make contact with a broker out here just to see what the market's like. But we're in literally 17 different markets in the country. And Florida is not one of them at this time. Not at this time.
Not that there's anything wrong with Florida.
Yeah.
we have a time bandwidth. We have a bandwidth issue on time because we have 4 kids.
Sure.
We have our portfolio, and we run our coaching business, and it's just it's a lot.
So what's the common traits of the 17 markets you are in? What are the common traits in those markets?
Well, one of the things that we look for when we're going into a market is just what is the market doing? What is the population, current population growth? What is the current job market, job growth? How business friendly are they, et cetera? So those are all things that we evaluate when we're looking at deals. Some of the deals that we're in are deals that we just purchased ourselves, and they were almost always value add. deals. And more recently, we have done, in the last handful of years, we've invested in other people's deals through syndication, just so that we can leverage more of our capital out. Because we found as our kids have gotten older, we have had less time. We can't do as many active deals.
Yeah.
Without sacrificing, being able to be there for them. So
when you say value add, what's the most common kind of percentage of value add to the purchase price, let's say?
there really isn't, there is no set percentage to purchase price. Every single deal is different. So when we're looking at a value add, so it depends. I know that some of the people that are coming to this, this podcast or to this meeting, this Zoom meeting, are like brand new, and they probably would do a 2 to 4 unit as their first one. And then some people are like, yeah, no, I want to do apartments. So let me just kind of separate those two for a minute to make sure that everybody gets value out of this. When you are just getting started and you're going to, do your first 2 to 4 unit, a value add would be the BRRRR strategy, where you're going to buy it, renovate it, rent it, and refinance it. So when we did those, it wasn't even a matter of what percentage of the purchase price compared to the value. It was, we're going to evaluate the deal to make sure that when it's time to refinance, the value is high enough that we can refinance at 70% and pull out enough capital that what we have left in there is reasonable, and that our cash on cash return is nothing less than like 20%. It was usually much higher than that, but nothing less than 20% when we're doing that strategy. So it wasn't about, it has to be purchased at this. It depends on how much rehab does it need? What are the rents in the area? Like how much cash flow can we produce? How much cash on cash return? What's the debt service coverage ratio going to look like? So just earlier today, somebody had asked me, do you just buy at 65 to 75% of ARV? And I was like, oh my God, not at all. That's far too simplistic of a way for us to evaluate it. So, but if it's the BRRRR strategy, we just evaluate the numbers to make sure that we're hitting the cash on cash return that we want, the DSCR that we want, and it's all like at the very end when we refinance and we take into account all the money we've put into it. What does it look like then? And then we literally back into how much do we need to pay? How much can we pay right now with this much rehab to give us those numbers at the end? So it's like we begin with the end in mind and back into the number. It's never a percentage. And every market is different. Property taxes are wildly different, market by market, and insurance is quite a bit different market by market. So that's why we don't ever apply any percentage. And I don't even think I've just never looked at it that way, because every deal is different. In the apartment world, when we're doing like a value add there, it's the same thing as what's the upside? What's the opportunity for us to increase the NOI? How much will that increase the market or increase the value based on the cap rate in the market?
I know for me personally, I'm a limited partner investor in multifamily, and I'll get deals that they'll say it was value add, but the value add is like 50% of the purchase price. And, over half the building is going to be renovated and replaced. And it's like, at some point it goes from being a renovation project to like almost a development project. Not there's anything wrong with it. That just isn't my appetite. To me, that's just a little more work than I would have to track. So I guess I was meaning more on a multifamily. Is your, I know you have an academy now, that's going to teach people what they want to invest in. But as far as your investments as either syndicators or as investors, are you today investing in 2 to 4s? Are you today doing multifamily, and what kind of projects are really your focus today?
Oh, right now we're actually working on a 42 unit mixed use motel. So we took that building, closed on it in January, and it's a big lift because it's in 2 buildings. And what we're doing is we're operating out of one of them while we're conducting the rehab in the other. And our goal was to get that rehab done in time for this weekend, which we did. So we're super pumped about that. It looks great in that building. So now for this weekend, we can rent out the rooms in the building that's fresh rehabbed at the new rates, and then rehab the other building and have that one ready by the end of June timeframe or the 4th of July weekend. And then get the new rates in there. So that's because it's a new model for us. We've never really done a motel or a mixed use or any short term at all. It's usually all long term. So for us, it's a new model. So we've literally been in that trying to figure that out and put it together. But our mixed uses, we took 10 of the doors and we're using those as long term, and the rents that we get from that will cover the net entirely. And so therefore, when you look at the short term rental side, there's just pure profit on the top of that. And so we really want to dial that in and figure that model out. So if any of you want to go to Wallace, Idaho and stay at the Stardust, it wouldn't hurt our feelings.
I was just thinking, my wife, honey, we have not been to Wallace, Idaho. And that Stardust is really the garden spot of the greater Wallace metropolitan area.
Maybe it has been a heavy lift because not only do we need to do the rehab and get it an optimal cash flow, we also have to look at the staff and the culture of how the guests were feeling when they came in. And today we had our operator who's there and our business partner running it and helping us with the rehab. She's boots on the ground because we've never even stepped foot in any of our properties yet, but we will be going to that one. But she just sent us a screenshot of our very first 10 out of 10 review today. So we were pretty much celebrating that. And
wow,
that's our most ongoing thing right now between that. And because we knew we were going to be entering into a motel, what we did is we changed up our strategy last year and we did 3 investments as LPs because we knew we were chasing down a motel. We actually thought we were going to close on it in December, ended up closing on it in January and have spent this year basically doing that value add. I will tell you, it is a very heavy lift. It's way different than apartments. I'm still undecided on whether or not we'll do another one or if we're just going to stick to apartments.
I'm already exhausted just hearing about it, just personally.
Yeah.
I don't have enough. And is this something you guys did yourselves, investors? Did you raise money to go along with you, or how did you do this?
We didn't. We just went in with partners, just us and our partners.
Wow. Joint venture.
Yeah, just a joint venture.
Couple of us.
We're pretty simple. We prefer joint venture over syndication. If we're doing syndication, we're not doing it to the point where we're the one raising the money yet. And I do mean yet. And that's just because of time right now. So we've got that on the side, just doing LPs, but anything between 5 and 25, even up to 40 or 50 units in a JV is kind of our wheelhouse.
Wow. So tell me about the Academy. Obviously implies you're helping other people do what you did somewhere along the line to get their success. And the tagline I see is 90 days to your first cash flow deal. Now, that's pretty exciting promise or pretty bold promise. So tell me about that.
Yeah, we actually we guarantee it. It's because we have an online learning platform that we've put together. So you learn it at your pace. It's on-demand learning whenever you want. You just go in there and watch it. Most folks are completing that course over the course of a weekend. And then our entire value, our number one value at the Academy is to get students results. Because when we were doing it, when we first started, there was nobody out there to help us make sense of the chaos. Yeah. And I got more binders than I had properties at one point, and it pissed me off. And by the time we started talking about it, we really just had a goal to disrupt the education industry in multifamily. We don't want you to just leave with a binder. We don't want you to just have a course. We want you to actually have a building and then another one and another one. So we say in 90 days and our students do that. They get them in 90 days and literally when they do, and we will bonus them with another 30 days to get into other things. So, nice. And it's just a continuation because our number one value is to see them get into a building. We've got 5 coaches that work with us. All of them have been in our life for a decade or more, and all of them have done deals with us and we trust them. They know our system, they're vetted. So we don't just put anyone as a coach in the business. And then, we also have a lot of people in the network, students that they're learning it so well that they want to become coaches. So we've created a community because it's lonely out there when you're doing real estate. You don't have anyone to be like, what was me?
Yeah. Right. For sure.
Yeah. So now we've got a sense of belonging at the Academy. Everybody, it's the Warriors of Wealth. That's their network. And those are the students out there working together. And we did 150 JVs last year. There was 150 JV deals just last year amongst our students because they're just getting deals done. And it feels amazing. It started off as a passion project for us. And we really wanted to create a community, but we didn't expect it to go as big as it's gotten. And so, well, now we just can't stop it. It's like that snowball effect. And we just get dopamine hits all day because we get updates on people getting into deals. So it's really cool.
Yeah. And I think,
nice.
go ahead.
No, go ahead, Jen.
I was just going to say, particularly when we're going into economic times where there's so much negativity in the news, and I'm not saying what they're saying is false. It is what it is, but it's a lot to have coming at you. And people, when they're new, they're trapped. They're stuck in like, I don't know what to do because everything sounds so big and so scary and so negative, and interest rates are rising. And I mean, when we started, like interest rates are like 7 to 8%. So we're like, yeah, man, right. It's no big deal. But I think one of the things that has come out of us I have been teaching real estate investing since 2006. I took a couple of years to learn it. Then I started just mentoring and teaching people while I was doing it. And one of the big passions for me, especially when people are trapped in like analysis paralysis, or I don't know what to do, is helping figure out what's going to help them to take the action. Because the thing that's like one of the most awful things, which is the same for Jen and I, we did the same thing. We spent a lot of money and didn't know what to do. And it's just not right. If people want to have a financial security and financial freedom in their life, they should be able to do that. And we just didn't feel like, we didn't see anybody out there that was consistently actually taking people across the finish line. It was like everybody just wanted to charge for more education. Education's freaking meaningless if you don't take action and don't actually close that, because you learn from actually doing it, but it's dangerous to do it without learning it.
Right.
Anyway, so we're very passionate, and it's one of our favorite things that happens every day when we get something from one of our students like, hey, I just got this property under contract. Everybody in the whole academy is like, so excited for each other. Or like Rachel today just found out she had done her inspection and she'd have a $19,000 price reduction.
She had already had a $14,000.
Yeah, and that was the second price reduction. And so she's never done a real estate deal in her life. I've known Rachel for like 11 years. We were pregnant at the same time. So 11 years ago, we were on our happy and active pregnant, doing our walks with our giant bellies. And she wanted back then to invest in real estate. Well, finally, she just came on. She joined the academy 45 days ago. Yep. And so something she has wanted to do like her whole life, she's like, I'm doing it. And she's so pumped and she feels so good because now it goes from being a dream to an actual reality. And that's our whole goal. It's literally to change the world, but through the individuals that we can impact, because then those people are going to go impact other people in whatever way they're passionate.
Sure.
So it's just what we're good at. We're good at breaking things down to a very easy to understand thing that's actionable, and then pushing people through those while holding their hands and rubbing their backs and patting them when they get scared or upset, and yelling when they need to be yelled at or cheered, to get them to do it. Because when someone does the first one, you're kind of unstoppable because you're like, I get it now. And it's just a system. You just repeat it.
So just to quickly reset, I'm Bill Gross. I'm substituting today for Annabelle Pacheco. This is her weekly multifamily call. We have guests today, Jen and Stacy Conkey, who are the Remote Multifamily Investing Academy, where they help people learn how to invest remotely in multifamily properties. And I'll just say the reason why we have this call is because I agree with your passion 100%, and I didn't want to do it. I personally, I just want to invest as a limited partner. I'm not interested in taking on the responsibility. I have a business. I do great at it. I'm building wealth in it. I just want to take my excess cash and invest and get a return for it. And I like the tax deductions and the cash flow. But I saw Annabelle, who bought a property and built it and flipped it and made a fortune on her first multifamily. And I said, Annabelle, I talk to people every day who want to do what you did. They want to know how. Just walk through what you did. And she kept saying, well, I'm just me. No, you did it. Just walk through what you did. And I pushed her to do this call, and it's grown into a group now of people who also want to play. And though the problem is, I can tell you, I get asked all the time, well, how do I do that? I don't know. I don't want to do it. I don't want to coach it. And I'm endlessly, approached by people who are coaching it. But I think just like my business, I get asked to coach in my business. I really don't do it very often because I'm a practitioner. I'm really good at what I do. I like doing the job. I don't really like talking about it. And so when I see people who are doing the business and have a coaching product, that's different. You're practitioners. You're in the field every day. You're learning it. That's why you speak with such passion about it. When you've been out of the business for 10 years and you're just a coaching company, now you're just a company selling a product, and it's different. But today you're working the dream. So I appreciate that passion. I saw that in you guys when I first met you, and I was really excited to have a chance to share with you here today. Hey guys, if you're on this call, you know the game we play. It's participative. Feel free to put a question in the chat box, or raise your hand in the Zoom app if you want, or if you want to just unmute yourself or something. I'm glad to have you jump in and ask a question. It's meant to ask questions. It's meant to participate. But our goal here today really is to help you, if you're interested in buying property, increase your income and increase your wealth, is how to do it, how to get started. And here you have two ladies who are committed to helping you get that first deal within 90 days. And that's a pretty exciting proposition. And like I said, I've seen them for a while now. I know they do this. Their reputation is fantastic. And you can hear in their voices the passion for it. Until we get a question here, what do you see, either one of you, as the number one thing that holds people back? I know you talk to people every day and they're excited and they sign up and they come to your class. And you mentioned, Jen, I think having to hold them and kiss them and push them and kick them and scream at them and love them. But what's the one most common thread you see that holds them back, that when that gets fixed, then they're moving forward?
Well, the first thing is that they get freaked out a little bit about even making an offer. That's usually the very first milestone that they watch the course, they get into it, they see everything they need to do, they get the information, and we have to give them that professional nudge to go make the offer and actually get into it. And once they make that offer and they get accepted, that's like their first big win. And everybody celebrates it, right? Then the next thing that they struggle with is, well, crap, this deal doesn't work unless I get a price reduction. But they're really terrified to go out there and try to negotiate or put together something that really communicates and illustrates why that price negotiation needs to happen and how to go ask for it, right? So we teach them how to do that. And then when they get over that, that's their next big win. And then they got to go through due diligence, continue that process, and actually close. And heading into that, by that time, their fear is gone. And what it is replaced with is, holy shit, I have a lot of stuff to do and I've got to figure it out. And I can't get the title company to get me what they need, or the insurance person. And I need this. And so they're trying to really push rope, or as Stacy says, herd cats. And it's like, when you're doing that process, you already forgot that you were afraid to make an offer and that you were afraid to do a price reduction. Because now you're just like, holy crap, I have to close this thing. And if I'm doing a rehab, holy crap, now I got to make sure that I got my scope of work together and me and the contractor on the same page. And if I'm raising money for it and doing a JV, I've got to make sure my partners are on board. So you really don't have time to be afraid by that. You just have to. True. So the first two steps are that, making the offer. And then if they have to do a price negotiation, figuring out how to do the negotiation. Or if an appraisal comes back and contesting an appraisal that doesn't make sense, doing that. Those are probably the three biggest. I don't know if I missed any.
Yeah, I think that's true. Once people are actually in, if you go a little bit further back, and part of it is we have two different areas that we're very passionate about within this. And for me, because I think I suffered so much from analysis paralysis, I'm an accountant and a CPA by trade. That's what I did before I got into investing. So people who tend to be in the engineering jobs, accounting type jobs, analytical brains, have a difficult time entering this business sometimes, because you want to analyze everything to death. So much so that if you're not so driven, you'll just keep analyzing and watching free YouTube videos until you die eventually, because you're just like, I don't have enough information. So people with brains like ours, very analytical, struggle. And so part of where I see people really struggling is even analysis paralysis, to just like pick a market. Like we taught you how, pick a market. Like that's where the push comes in. Jen says a professional nudge. It's no such thing. We're like,
I'm the mindset coach. I'm the mindset coach. So of course I'm going to say something like professional nudge. Stacy's the one who comes in and pushes.
Kicks him in the butt.
Let's go. Yeah. Pick a market and start going. So you really have to know, obviously, when you're
make a small commitment at least to get started, right? You have to make some step.
Yeah.
When I started as a buyer's agent, the company had trained us, and they would talk about doing a buyer consult. And I came up with the idea that just the amount of paperwork on buying a property can be overwhelming. It can be. Back in these days, this is before electronic signatures, you had to actually hand initial and hand sign the documents. And so I had the idea that I would get a contract package, a sample of what an offer would look like. At the end of the consult, I'd say to the buyer, look, when we find what you like, the next step's going to be make the offer. Now, you have to analyze the property, make the decision, and then you have to sit down and actually, sign the papers. Let's go through the process physically, what that looks like, so at least you know what that it feels like when the time comes. What's amazed me is half the buyers couldn't sign the paperwork. Just that small commitment, they weren't ready to make it. For whatever reason, they would interrupt, they would change their mind, they would halfway through, well, I already did it. No, this is the job. Like if you're going to write 5 offers, you're going to do this 5 times. Let's do one practice, make sure you understand exactly what's about every piece of paper, every spot you have to sign on. Let's make sure we get it. And I would find that commitment would weed some people out. And I think you're right that people have to plant a seed somewhere, get started, make a commitment, take a baby step, next one, baby step, because for people, it's hard to make those changes.
It is for two reasons. And the first one is that comfort is just, we always strive to stay comfortable, and anything that's uncomfortable, we fight. And I think it's the survival brain in us that wants to say, no, I need to stay over here because that's new and I don't know it. It's uncharted territory. I'm afraid. And once we step through that, it just works for us. So I see the same thing.
I always tell people in transformation, you need three things. You need a leader or a coach, a visionary, a pastor or a priest, or a person who you look up who has a vision of where you want to go. Second is you need to have the system, the process, the book, the methodology, the class, the steps you take in order to go from A to B to C to D and E. And the third is you have to have a group of people with you that are in the fight with you, that are some are slightly ahead of you, some are slightly behind you, so that in the natural course of struggling, you realize that's just part of life and other people going through it, you have to go through it too. And it sounds like your program offers those three pieces, right? You guys are the coach, you have your methodology in terms of the class and the academy. And then I looked online, you have like 20,000 people in your Facebook group. Oh my gosh. So there must be a lot of synergy there of people who are at the same stage you're in, or slightly above or slightly below, that will pull you along. So it's definitely worth looking into. If somebody was interested in exploring your program, what would the first step be that they would evaluate it? Besides hearing you today, obviously, what would the next step be in order to make a decision whether we want to get involved with your program or not?
Well, I think the first thing is you decide whether or not you want to go after 2 to 4 unit properties, or if you want to go after apartments. That's the first step. The second step is you can register we do a weekly training for the public, and you can kind of really fill out some of our training topics. But if you go to, is it www.wowaua.com, you can register in our weekly trainings just there every Wednesday. And if you register there at WOW AUA, it's WOW, Warriors of Wealth, which is our network of students. And then AUA is askasanything.com. And you come, we do a different topic each week, followed by an open Q&A just like this. And we answer questions live. And then if you feel like you want to explore things a little bit deeper from there, we can get you on a call with one of our strategists or our director of education if you'd like. We can also get you access to our masterclass on apartment investing, or our masterclass on small multifamily investing, remote investing even. Nice. And you can join our Facebook group. I think you dropped the link in there, Bill. Yeah, join our Facebook group also, because there's a lot of content in there, a lot of cool people doing this. Nice. And there's 2 pictures of both you guys either looking very cool and hip with your phones. Yeah, the photographer made us do that. I was like, I don't walk around like this though. The classic, we're so busy, we're in action on the phone kind of thing. So I was really impressed when I saw that. Everybody needs a lot of I'm kidding. I don't know. My marketing stuff's a disaster. So I have to tease other people to deflect from my own insecurity. Okay. And I think that's also really important that you offer the free opportunities for people when they're ready to step forward. They can for free get into a weekly call, wowaua.com, Warriors of Wealth. I don't know what AUA stands for. What does that stand for? Ask us anything. And you said that, but you said it like that was really ask you anything. Okay. So Warriors of Wealth, askyouanything.com, WOWAUA.com. That will sign you up for the weekly call, which I guess is Wednesdays, probably earlier. At 3 p.m. Eastern. It was a couple hours ago. 3 p.m. You just missed it. So sign up now for next week's call. You can be there. Or go to their Facebook group, which is the Remote Multifamily Investing Academy.com. Join the Facebook group there. You can meet people. I'm going to do both as soon as we're done here on the call. I find it fascinating. One question we did get was, how do you estimate rehab costs and the ARV? Where do you come up with your numbers? What kind of resources do you use to estimate the values? So for ARV, first of all, one of the things that we teach, actually, before I answer that, can I ask a question of the audience to kind of gauge? Okay. Go for it. My first question is, can I just say you can do whatever you want? Like there's really no rules here. So okay. As long as it's fun, go for it. The first question I have for everyone, it helps me to then kind of focus my answers based on where you guys are at. Multifamily, we say multifamily. I know that sometimes people say multifamily and they mean apartments because that works for, but multifamily is also 2 to 4 units, but they are 2 different animals. We obviously teach both, but I would like to know for everyone here, if you can put in the chat, is your first deal or your whatever deal you're doing next, whether it's your first deal or your next deal, is that something in the 2 to 4 units, like trying to get your first duplex, or is it something like in apartments where you're trying to get 10 to 20 units? Can everyone in the chat just put
2 to 4 or apartments. And that will help me gauge kind of the,
And while everyone's doing that, is it okay, Bill, if I just
Yes.
drop 2 links
Yes,
for
sure.
people? Okay.
Whatever you want's fine. That's pretty easy here. We only have a whole lot of security. It's
okay. It looks
I know-
like, okay.
sorry, Jess. I know there's some rules somewhere online, but we're just going to wing it here today.
We're
Have
just a
fun.
free for all.
It's a free for all.
Okay, it looks like the
Well, and
majority.
if anything goes wrong, we'll just blame Annabelle for it. So we could do whatever we want today.
All
I'm
right,
sure
go
she'll
ahead.
be
Helen.
thrilled.
It kind of looks like the majority, at least when I could see the chat, majority of people were saying like 2 to 4. There's some people with apartments.
Yeah.
So I'm going to answer the question for 2 to 4 units. And then I'm happy to answer any specific questions about apartments. So when it comes to evaluating a 2 to 4 unit property, so you're trying to get in your first multifamily, small multifamily, you're looking at ARV. The only reason you would be looking at ARV is if your strategy is to do a value add or the BRRRR strategy, buy, renovate, rent, refinance, right? So otherwise ARV is not relevant because ARV means after rehab, right? So I just, in case, because I know there's a lot of people here, so I just want to establish that so when people know why I'm answering the question, what it pertains to. Because if your goal is to buy a duplex that's already performing, already has tenants in there, just get ready to cash flow, ARV is irrelevant. Okay,
Right.
So ARV, when we're doing market outreach, we primarily focus on apartment buildings now. It doesn't mean we will not buy a 2 to 4 unit if something comes across our plate. It kind of has to land in our lap, but we don't focus on that anymore, but we've done tons of them and we're very knowledgeable about it. And our students are doing it all the time. When someone is starting off new and they're choosing a market, which you have to do market research to pick a market that makes sense based on what you're trying to accomplish. The first thing you're going to do after you select the market is start reaching out to realtors. And I mean, this is our process and also what we teach our students. When you're reaching out to realtors, you are telling them exactly what you want. Don't be so wide with, oh, I'm open with this and this and this. They won't send you anything because they don't know what the heck you want. So if you're looking for a BRRRR deal, you tell them I'm looking for a duplex, in this example, I'm looking for a fixer-upper duplex that I can buy, renovate, rent out, and then refinance. And they're like, oh, okay, so I'm looking for a fixer-upper 2 to 4 units. All right, so when you're telling the realtor, this is what I'm looking for, and if they say, oh, okay, that sounds good. First of all, you're gonna talk to as many realtors as you can in every market that you choose. This is a numbers game. Most of the realtors you talk to will be like, oh yeah, or they'll say, no, I'm not interested. Or they'll say, oh yeah, but then they don't send you anything. So you need to reach out to a lot of people. What you tell them is when you send me the fixer-upper duplexes, make sure that anything you send me, you send it to me with comps. Okay, that's the very first thing you're going to do. And you're not going to accept anything otherwise. So if your realtor sends you a duplex and it's just a listing, you say, oh, that's, first of all, always show gratitude. Thank you so much. I think you were taking the time to send it. I am very excited to write an offer. In fact, I'll write an offer, depending on the time of day, either by tonight or by tomorrow. So that incentivizes them to pull this up. But here's what I need from you. I need you to pull everything that's sold in the past 6 months within a half mile. That's also a duplex. All right. And then, if there's not very much, then go out a little bit further or go back a little bit further in time. So Jen and I don't go look for comps. We let our team know this is what we need. We will write an offer very freaking fast. Like we will analyze it. We'll take action. We'll write an offer. But this is the one piece we need from you. Right. Okay, so that is one way that we find ARV. The other way, if there's a situation where I don't really get a lot as far as comps, or the comps are kind of giving me differing information and I'm not feeling strong clarity there, then I will sometimes then go to Redfin and use the filters and just see what else has sold. And I might go further back, further out and look at multifamily. I never look at any kind of single family in there, and I never look at anything over 5 units. So when I'm looking at duplexes, I'll look at anything 2 to 4 units to get an idea. But ideally, I'm looking at just duplexes because that's closer apples to apples.
Sure.
But anyway, that's how we get our ARV is first our realtors. We put it back on them to send it to us. And if they do, we will reward them with acting very quickly and getting the offer to them to show them like we're serious.
Nice.
As far as the rehab costs, so when we're going into a deal, we'll take a wild ass guess. We'll look at the pictures and be like, we know we're going to do this and this. Yeah. We'll come up with like some kind of chunk amount, throw it in there to analyze the deal and make the offer. Most of the time offers aren't accepted. Sellers always believe that their baby is prettier than we think it is. And, we're not willing to pay as much as they want. So oftentimes they say no, but I don't know who's going to say yes because it depends on who's motivated, right? So we just make no judgment. We make whatever offer is the number that works for us. And we send it in. If the seller says, okay, yes, and they accept it, during due diligence, we send out a minimum of 3 licensed general contractors who have experience doing rental rehab. I'm not looking for the high-end kitchen guys, obviously.
Right.
But that's how we get our rehab number. But we don't wait to make an offer until we have all of the perfect information. We get a general amount, we calculate the offer, we send it. If it's accepted, we get general contractors out there. If the numbers look like they're working with the GC, then we'll get the home inspector out there. And we do all of that within the 10-day inspection period.
Nice. Yeah, you got to get the deal under contract. I went to Grant Cardone's real estate 10X bootcamp last year. And the one thing I walked away with is you just got to get the deal under contract. Whether you're buying, large buildings, 2 to 4s, single family homes, doesn't matter what it is. If you're not under contract, you're just not in the game. And you got to get in the game as honestly and as close and quickly as you can. And then you really sharpen your pencil at that point and figure out what the deal is going to be. Yeah, fantastic. Okay, so people are liking this. We got some good contact information going back and forth in the chat box. Feel free to put your info in there or pick up other people's info and make side deals. Don't worry about cutting us out of the deal. We want to create a network where people get together and share ideas. Eric asks, what states are you seeing decent cap rates? Now that's a loaded question. Seeing that California is way too expensive. Thoughts? Again, loaded question there because one person's, I forget the terminology, one person's
trash is another man's treasure.
Exactly. And there are people who love Beverly Hills apartments because they're going to get 2% cap rate forever. And they've been around for 30 years and they know it's going to appreciate. And they just are as happy as can be with that. And there are people who invest in Indianapolis and go, oh my God, I would never go below a 6 or an 8. I remember I was an agent in 2008 or 9 when cap rates came below 9% in West Los Angeles. Nobody will ever invest a cap rate below 9% in West Los Angeles. Today, you can't find anything over, under, say over a 3%, let's say if it's really done right. So where do you see cap rates? How do you make that evaluation? Obviously, higher cap rate, you're taking on some kind of risk. It's not free money. So how do you guys make that assessment? Where do you?
It really first, Eric, that's a great question. The first thing you have to decide on before you're even bothering with wondering about cap rates is knowing what is your strategy. So if you take the 2 strategies of stabilized and value add, when you are looking at stabilized deals, the higher cap rate is going to produce a higher cash flow, right? It's a pretty direct correlation. But cap rate is also an indication of what people are willing to pay. So for example, let's say that the market cap rate in a market is, just to make it round, is 10%. What it means is investors are not willing to buy a property in that area unless it's giving a 10% cap rate.
Right.
And so let me just I'll throw some markets out. It might not be these exact numbers, but let's say Hartford, Connecticut, because we had one of our students who was wanting stabilized buy 2 apartment buildings there because at the time it was about a 10% cap rate. So Hartford, Connecticut, and if you contrast that to Miami, Florida, where we had some of our students do a value add deal. So Eric, if you're looking to do a stabilized deal and you're trying to maximize your cash flow, you're probably going to go with a higher cap rate market. Okay, so because property values aren't as high, which means you can pay less and get a return. In areas that have a lower cap rate, those are ideal when you're doing a value add. And the reason is that with apartment buildings, the way that they're valued being tied to the net operating income, that means if you can increase the revenue or decrease the expense or both, you're increasing the profitability of the building. So this only applies, guys, for those who are to 5+ units. This has nothing to do with 2 to 4 units. But when you do that on an apartment building and you have a 5.5% cap rate, the value of the property goes up a lot more. And can I do like a little math thing? Can I have everyone get out your phones real quick so I can show you something?
Sure.
All right, you guys gonna do it? Let's see.
Yes.
Evie said yes.
Evie says yes. Okay, so
I'm on
Evie's
board.
proud and I'm excited. So everyone get out your phone or calculator or something. Because the first time someone broke this down for me, I was like, why has this been so complicated? This just made it so easy. So I want to show you something. Let's say that you are working on a property, and through your work on, let's say it's a 10-unit property, and you do some increasing some rent, some decreasing expenses, and you increase the net operating income by $1,000 a month, right?
Okay.
That's not too difficult to do. So $1,000 a month, that means $12,000 a year, right?
Correct.
So if we are in a 10% cap rate market, so what I want everyone to do, put in your phones, let's do the whole math. For those of you that are mathletes, I'm sorry, I'm going to go step by step because not everybody is. All right, let's take $1,000 because that's the monthly increase in NOI times 12, right? So $12,000 should be in your calculators, right? If we were in a 10% cap rate market, what we would do to find out what the increase in value would be based on that activity, we would divide that $12,000 by 10%, which on your calculator would be 0.10. So take 12,000 and divide it by 0.10, and I want you to put in the chat how much of a value increase was that in a 10% cap rate market. 120,000. Yes.
I got it.
Yep. Raul, good. Evie, yes. Yeah. So you take $12,000 divided by, I think Jesse multiplied it by 10%.
Yeah, I multiplied it by.
Yeah, that's what it was. Yeah, this is good.
That's why we do this, because not everybody's good at math.
Exactly. So that's what it looks like. Well, we've had a handful of people do it.
Mhm.
When you guys do this, the connections will be crazy what happens. So we know, first of all, that's great. You make a $1,000 a month improvement operations, you get $120,000 of value. Hell yes. Now,
Count me in. I'm in.
we're in a 5% cap rate market. Let's say we're in Miami and it's 5% cap rate. I don't know what it is right now. It's probably between 5 and 6. Let's say it's 5%. I want you guys to put in your calculators that same $12,000 and divide it by 0.05, which is 5%. So 12,000 divided by 0.05. And what do you get?
Nice job, Evie.
Twice as nice.
It's twice as nice. I love it. Yeah.
That's right. So you guys do that. Wow is right. So that's why, like, markets, you really have to select your market based on what your exit strategy is. You wouldn't want to do a value add in a market where the cap rate is really high because you don't get as much, nobody's willing to pay that much more for it. Although it's still great, right? You can still, value adds are amazing. Like, you can make so much money on them, but when you're in lower cap rate markets, you can make even more. Right. So the question of what market are you seeing? It's really not about what has good cap rates. There is no good cap rate. It's what cap rate meets your goal of doing that. But the other side, it's not all magic in roses and butterflies. When you're doing a low cap rate market, you are also dealing with lower cash flow while you're doing that turnaround. And sometimes you have to be well capitalized because that might get things like tight. So anyway, there's a lot of strategy that goes into doing it. But when you're choosing a market, you're going to probably find that some of the higher cap rate markets are like Midwest, tends to have a lot of the higher cap rate markets, and you're going to find a lot of low cap rate markets on the coasts, like California, like LA, for example, is 3%. Like, you will make so much money if you could somehow even get into the game. That's the problem with California. Some of the expensive markets, the barrier of entry is so high that it doesn't even.
We have tenant restrictions also. So yeah, if you could double the rent, you'd make a fortune. But then you get 3 deadbeats in the property and they're suing you and you're paying more legal costs and you're collecting the rent for 6 months. That's the common experience for too many people.
Exactly. Yeah. So that's why I don't give you like any particular like one market. It's more better to, it's better to understand what it is. And then once you know what you want, then go start looking at markets and find out like what are the cap rates there and go for the markets that make sense for what your cap rates are. Or what what your strategy is.
Right. So is the cap rate's the one that's right for your strategy and the timing and the area that you're at. And that's why it's so important. People can get very caught up in a lot of details and missing the picture. And I started to realize why the cap rate wasn't so important to me on value add in some of these higher end markets. I don't like Los Angeles, but I love South Florida. because there is room to raise the rents because there are people moving there with higher income and there's more desire for higher end properties. And so you can value add. And if you add $2 or $3 a month to the rent per unit on a 300 unit project, it's more and it's better. So, okay. Well, that was great, Stacy. And I just had to say, I like that you guys messed me up there with the names being different than your order, left to right. I've been calling Jen the whole time. You never corrected me, but I now picked up Jen's on the right and Stacy's on the left because your names are.
Oh, on our screen, it's Jen's on, we are matched up on our screen, but so.
That's funny.
Let's flip it.
Let's flip it.
Okay.
I thought you guys are just doing this to fool me. And then
do this.
I see on your Facebook group, there you go. That's how it's the Facebook group. Okay, good. But you guys just did it to me just to torture me the whole time. Okay, good. That's okay. I'm a professional here.
The opposite. Yeah. That's good to know.
I'm a professional here. I can roll with those punches. Okay. Well, that was fantastic. Now, is that the kind of thing you guys do in your calls from time to time? That was like fantastic to go through those numbers real fast like that. I think that I've seen those numbers numerous times. I need to see it again and again because the more you see it, the more real it is. And if you're looking at a real deal, like, wow, this makes a lot of sense. I'm going to invest. That's what happened. I looked at a deal and the guy just ran through the numbers. He said, well, here's what we're going to do with this project. And we can add, $2 per unit times X number of units. I'm like, oh, wow, that's fantastic. Here's my $50,000. I'm in. So yes, and thank yous. Okay, yeah, thank you. Jean and Connie says thank you. Yeah, I think this is really
helpful. And Bill, that is what we do because it's so hard. When you've already been doing real estate, you forget sometimes what it was like to know nothing but want it. And so I am gifted with the desire and the fire and the knowledge on how to step in to where anyone is at, particularly in the beginning, because I can remember like it was yesterday and it was 19 years ago. Yeah. I can remember it was yesterday sitting down to write my first offer and wanting to vomit. I was so scared. Oh, wow. So I'm like, I really get what it's like to be new. And I don't want people to not do it because of fear.
Sure.
Because once they can get over it, they can do one deal. That's all you need to be like, okay. And to prove to yourself that this is a possibility. So anyway, every time we speak anywhere, we are always trying to educate and to show people what's possible or to break down something they didn't get before and make it understandable.
This call exists because Annabelle wanted to do one deal. She thought she'd make a couple $100,000. Her first deal, she profited over $1 million.
Wow.
Now, for most people, they can retire on that or live on that. She's pretty ambitious. She's rolled that into some hotel investment and do some development work and off living her best life. So that's what's possible when you pursue your passion, you learn the process, you put the time in, the hard work in. Okay, so we're going to wrap up. I think Jen and Stacy, reading left to right, or Stacy and Jen, as you were before. Thank you so much for your time today. Stacy and Jen Conkey, they are the remote multifamily investing academy, where you can get your first deal in 90 days. And they guarantee that. And I've seen them online with students. I know that they're for real. And then they have a Facebook group, Remote Multifamily Investing Academy. They also have a free weekly call. And I just think it's so important that when you can get free information from people you want to do business with, and you can see them week after week, do they show up on time? Are they consistent? Are people calling in and complaining to them? Or are they able to grow and help people? That's what you're looking for. They have a weekly call, which is wowaua.com. That's WOWAUA.com. That's on Wednesdays at noon, I guess, Eastern time, 9 o'clock our time on the West Coast. Guys, it's really been a pleasure. Thank you so much for being here today and educating so much, offering so much for free, and I know you guys are very active members of the multifamily investing community. So thank you so much for your time.
Thank you, Bill. Thank you for having us.
It was awesome.
And on behalf of Annabelle Pacheco, this is her weekly multifamily investing Zoom. She does this every Wednesday at 2 p.m. Pacific time, 5 p.m. Eastern. And you can register. It's also streamed, put onto live into YouTube and to Facebook. Thanks to Just for Helping today and all the friends who came in, Chris,